Hello and welcome to Pro Trader Strategies market commentary for Monday, August the 10th. My name's Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that impacts the overall markets with my market analysis. Well, I do the same thing in these daily market commentaries, but I go a bit further and layer on top of it some option strategies I find on a daily basis based on that economic, geopolitical, and market analysis. What I'm here to do, though, is to teach you guys how to take these option strategies, follow the guidelines that I set out in my webinars, and implement them into your portfolio in your own way. Without further ado, let's get on with a couple of things. I usually start out with the economic data, but a lot of you guys have been requesting that I reach out and give you guys what is in my watch list and how I'm keeping an eye on those things. So I'm going to just scroll through my watch list really quickly. As you can see, I put everything over on the side. I added the script for implied volatility percent because if you follow me, you know that implied volatility percent is the main driver of our guidelines to implementing an option strategy. If you don't know what my guidelines are, then please go to ProTraderStrategies.com, sign up for those webinars. Right now we are doing the roadmap, so that's a really good one for you guys. All right, so like I said, I got the watch list over here. I have it listed from highest implied volatility percent to the lowest implied volatility percent. So if you want to add these to your portfolio or to your platform, please take a moment to pause, and then I'm going to scroll through this so that you guys can then add all of these names there. These are the ones that I find have the tightest bid ask in the option montage. So make sure you check out my rules for what makes it in the list. So for the most part, these are all pretty good optionable stocks. So a couple of them are just some of the ones I'd like to keep an eye on. I don't always trade options around them, but just make sure you're following the rules of whether or not it is a optionable or option tradable underlying. Okay, so we start out at the top there, and then I'm just going to scroll down so that we get to low, and I'll pause it there for a second so you guys can get a second to repause this and copy down on that. You notice we're going to be talking about Intel here in a moment, and then I'll scroll all the way down to there so that way you have an opportunity to copy those down. Now let's get on with the economic data. It's a Monday, not a whole lot to see here for a Monday, so let's just get on with the economic data and talk about what's been going on in the markets today. We've got crude oil here, just slightly in positive territory, really holding on to that 40 handle. It looks like it's here to stay for quite some time. We're building out a volume node there. It's at the lower boundary of the value area, which is where the most time and volume has been spent. 70% of the time and volume has been spent in the last 52 weeks. We've got bonds just slightly in negative territory, but holding on to that 180 handle. We've talked about this right there at 180 is right the sweet spot between 183 being a little bit overextended to the upside, and once you get below about 177, that starts getting a little bit overextended to the downside because interest rates aren't probably going to go anywhere for the foreseeable future. All right, gold is in positive territory after Friday's big sell-off. Still in that 2,000 handle. I think it's going to hold on to that, especially, well, we didn't have any result out of Congress as to what the stimulus package was going to be. So there was an executive order by Trump extending some unemployment benefits and allowing people to have a little bit more of time to pay rent. Also, another thing is that college students weren't necessarily going to have to pay back the interest on their college loans, or they were getting a reprieve there as well. But the expectation is there's going to be a stimulus package, more printing of money that's going to weaken the dollar, and that's going to give the gold bugs a lot of room to the upside. All right, VIX is moving a little bit in positive territory because we have a mixed bag. Why would the VIX be moving in positive territory when we got the Dow Jones up 254 points right now. Well, it might start looking like what I talked about for about, feels like months now, or about a month now, where I've talked about the tech sector's just been a little bit overdone to the upside, and it looks like there's going to be a time here where we're going to start seeing some people take some profits out of those tech sectors and put them into more of a blue chip type stock, whether it's blue chips or in the E-mini S&Ps, but basically more of a sector rotation out of some of those ones that have just had gangbusters to the upside on their stock prices. It looks like people are starting to take some profits there, rolling out of that and into some of the Dow. So it looks like it's finally starting to shape up that way. Whether or not we can hold on to that transition for very long is yet to be seen. We'll talk about that a little bit more on some of the trades that I'm looking at. And as you can see here, this is what I'm talking about with the NASDAQ. It had just broken below the 9-day simple moving average, which shows short-term bearishness, and above or right below that 11,000 mark, which you can see we're just teetering above that right now and now breaking right below it. So basically toggling back and forth, and that 11,000 psychological level just so happens to line up with the 9-day simple moving average, which is that short-term bearishness. So that is something we're going to have to keep an eye on, and whether or not the 70 Fibonacci holds on right here as we're looking at how I built out my Fibonacci there is basically drawing it out based on value areas and the points of controls, trying to line some of those up there and just getting a bit of a Fibonacci extension, if you will. All right, E-mini S&Ps. Actually, E-mini S&Ps just went into negative territory. They were in positive territory for the better part of the morning. Actually, right after the open, we had a massive sell-off there, as we'll see here in the breakdown of the daily charts here. This is 30-minute candles. You can see right off the open, just got slammed, made a move to the positive in the E-mini S&Ps, and now kind of settling down here in and around that. But I want to get moving on because I have a lot to talk about here with the markets, things that I've been kind of doing today. Something I'm going to have to keep an eye on with PENN. Now, you guys know I bought this at $4.49. I've made a nice run. It's in my IRA, and it's something that I really want to kind of hold on to for a longer duration. It's kind of a reopening trade, though, and it looks like college football is not going to happen. That's going to hurt PENN, despite the fact that Barstool Sports and PENN National are kind of one and the same, and that reason why I got into PENN was because of Barstool being able to pull them out of some of this deficit that they're seeing with the gaming. You know, they're basically a betting company or a casino for the most part. They and Barstool has been giving them some national exposure, and I think that they're going to do very well for that down the road. Now, what happens in the meantime? Do I want to hold on to this for the rest of 2020, or do I want to reallocate it? Well, I'm juggling that right now. It's in my IRA, and I'm leaning towards holding on to it, but I don't know that we're going to see 50 anytime soon. As a matter of fact, we might see 30 before we see 50, or the 30 handle before we see the 50 handle again. But at this point, I'm holding on to that for right now. The other thing we saw that I was talking about with Intel Corp, right? Intel, you guys know that I am long Intel. Been getting beat up on it a little bit because I got long at around $51.27. We're trading below that at 48. I had gone in there, tried to lower my overall cost basis and possibly do some dollar cost averaging with this trade. And so I went in and sold the August 45 puts in there. And I originally sold those for, I believe it was off the top of my head, I'm drawing a blank. I think it was like 48 cents. Let me just double check because I want to make sure that we got this correct. I had sold those for 43 cents in there, and then bought them back for 14 cents today. So lowering my overall cost basis in that trade for almost 30 cents there. You know, I bought it at, like I said, 51.27, right? 51.27, lowered my overall cost basis, now just below $51 there by staying mechanical with this trade, something that I own as a long, and look to do some dollar cost averaging with that, with this pullback that we've seen. So I'm not out of the woods there on that one. I'm going to continue to look at lowering cost basis on that trade there as we go on, because I think that this is one of those ones that it should be making some moves to the upside, but because they have some delay on one of their chips, that it's gotten beat up for that. And then another one that some trades that I've done, Facebook. It's been one of those tech, you know, the fangs have been really blasting off to the top with the overall markets there and helping push them. So with Facebook, I went in there and sold some calls in the August. So I went really short term, 11 days to expiration, going to take advantage of that theta decay. And we're starting to see some volatility expansion here with this. I'm going to try and take advantage of more theta decay than the volatility contraction here, although I do believe that it's a little overdone on their volatility. So I sold the, like I said, the August 290 calls, which gets me well above the high that we printed on Friday. I think we're going to see maybe some profit taking going on here, and sold those for $1.39. So probably look for 50% of my max profit on that trade. Did all of these relatively small, not a full tranche here, because I wanted to make money on some of these quick little trades, but I also am still a little leery of a move to the upside there for these stocks that I added some negative deltas to my portfolio is really what I've been looking to do. And you guys have known I'm trying to add some negative deltas, and this is the time I think is the right time to do that. And in Adobe also went to those August with only 11 days to expiration, sold the 470 calls in there for $1.62. So again, getting above those highs that we were printing. I don't think that we're going to necessarily see those anytime soon again, at least maybe until we see their earnings. So in the meantime, I think we're going to see some consolidation and or sideways to down in some of these NASDAQ tech heavy type of industries. All right, so that's all I've done. Intel, Facebook, Adobe. I took off the Intel on that dollar cost averaging and trying to lower my overall cost basis, staying mechanical with that trade. Added some short deltas to my overall long portfolio there. Now I'm getting a little bit more neutral in the portfolio, which is exactly what I want right now for a market that has gotten a little bit frothy maybe, and maybe seeing some sector rotation. So I've kind of set my portfolio up for that at this point. All right, that's all I got for you guys. You guys got the watch list. Check that out. Also, check out, we're having an action-packed week with some webinars. So go to Pro Trader Strategies, sign up for my roadmap to creating an option strategies. We come up with a market assumption, generally speaking, and then we go down through the breakdown of those guidelines in order to implement these into our portfolio. Now, I did fudge a little bit on some of my not strikes, but my days to expiration on these trades. But that's because we're in earnings season, and some of these, like Adobe, has the earnings next month. So I want to stay away from that and watch this consolidate at least for the next couple of days ahead of those earnings next month. So not always exactly to what I was doing in some of those webinars, but you guys know that I've been looking to add some negative deltas to my portfolio, and that's exactly what I'm doing. Please take a moment, go over this right here, which is the disclaimer. We are an educational company. There is risks here, so please take a moment to realize what your risks are by reading over our disclaimer. And that's all I got. I hope everybody had a great weekend, and if you can't take that, take it easy.